we just came off of 8 years of the Obama Messiah, right, who apparently saved the free world, according to some pundits. But what really happened? There was more federal debt created during his 8-year administration than all previous presidents combined. And he's the only president in U.S. history to have been at war every single day of his presidency.
Hello, everyone, and welcome in to CrushTheStreet.com. I've got a really interesting guest on the line with me today, a man who's lived all over the world, currently in Latvia at the moment, while I'm here in Texas. His name is Bobby Casey. He's with GlobalWealthProtection.com, and he focuses on internationalizing your investments. And really, I know this is a topic that many people who listen to this podcast are interested in. You want to know what you can do to protect and keep the majority of your money. So we're going to have a deep conversation today with Bobby. First of all, Bobby, thanks for coming on the line with me today.
Hey, Kenneth, thanks for having me.
So, Bobby, I want to start off here. We have a situation where the stock market is hitting all-time highs, a little bit of uncertainty now with the debt ceiling, the $20 trillion debt ceiling. And we're seeing some growth in the economy, if you want to call it that. The Trump effect. I know Trump's taken a lot of credit for that. But you know what? What are your thoughts here? Is the growth that we have seen, is that just because we've injected trillions of dollars in the system and we're getting some wealth effect from that? How long can this go on for, and do you believe it?
Well, for sure, an enormous part of this wealth effect that's happening is the trillions and trillions of dollars that got printed out of thin air that are finally funneling its way into the economy. I mean, we had bailout one was $900 billion. Bailout two was about that. Then the third bailout, which was $80 billion a month, that went on for 3-4 years.
Right.
So we're into trillions of dollars of fresh new zeros on a computer screen that got injected into the economy. And if you understand how the fractional reserve banking system works, and I know you do, but for your audience, you understand how the fractional reserve banking system works. The Fed, or the central bank, if you're whatever central bank, Bank of Japan, Bank of England, ECB, whatever. But if you're the central bank, you're kind of the center of the universe. And the closer you are to the center of the universe, the more benefit you get from it. So your big primary banks and investment banks, they're going to be the ones closest to that Federal Reserve or that central bank. Your big banks, Bank of America, Wells Fargo, your Goldman Sachs and stuff like that. They're going to get the best impact from that because they're the ones getting free money, right? I mean, it's insane. They're Bank of America themselves, I can't remember. Do you remember what their bailout number was for Bank of America back in 2009?
I don't, but it was a ton, and you're bringing up just such important points. Is that who else gets the benefit of free money? I mean, who else gets that favor from a quasi private government organization where you get to borrow free money and then invest it and just make insane returns when you think about it?
Well, it's actually even worse than that, right? The Federal Reserve, basically, all they're doing, literally the Treasury Department issues this bond issue, $100 billion bond issue. The Federal Reserve, they just punch in some numbers on a computer screen to create money, and they buy that bond issue. Mm-hmm. And at this point, it's been a while since I looked at this, but last time I checked, the Federal Reserve was buying about 80% of all new bond issues.
Right.
U.S. Treasury bond issues. So if the U.S. Treasury sells $100 billion worth of bonds, the Federal Reserve creates $80 billion out of thin air to buy it. And that money then, this monopoly money, I mean, really what it is, right? This monopoly money flows into the Treasury Department. And then the Treasury Department, theoretically, right, they pay their bills, they pay their rent, it funnels out through the economy, defense contractors, so on and so forth. But now you got the Federal Reserve. They're also basically giving free money to Bank of America. Right? I mean, we had these bailouts of Bank of America in the tens of billions of dollars, free money just to recapitalize the bank, just because they didn't know how to run their business, but we're going to bail them out anyway, right? But on top of the tens of billions of dollars of free money they got, now they get zero interest loans, which they turn around and deposit back in the Federal Reserve and get interest on.
Wow.
Which is insanity. You pay zero interest on your loan, and you turn around, or your loan, and then you turn around and loan it back to the same entity that borrowed it from you, or you borrowed it from, I'm sorry, and you get interest on it. I mean, that's an infinite profit margin.
Yeah.
Right? Even if the interest rate is only 0.1%, 0 to 0.1 is infinite.
Yep.
Right?
Bobby, many people are talking about, the Federal Reserve and how they were in the bond market. And we know central banks around the world are purchasing stocks. And many would say that the Federal Reserve is in there covertly buying stocks. But what is it? What is it from?
Say it ain't so.
What is it that's stopping the Fed from going into the stock market to a large degree, and beyond that, what about the real estate market, and start buying houses for 2-3 times their fair value to support the housing market?
What's stopping them? Is that your question?
Well, I mean, is that what's next in terms of stimulus?
I mean, what's stopping them? Good moral character. That was a little joke, just a teeny joke. I mean, nothing is really stopping them, right? I mean, I think the next big bubble to pop, and everybody's talking about it in a bigger scale, is the student loan bubble. There's also the auto loan bubble. It's, I think that's coming. You've got cars, General Motors and Chrysler, they're Fiat. Right, Fiat Chrysler, or whatever the company's called now. General Motors, Fiat Chrysler, they all got all this bailout money, hired a bunch of workers, built some new factories, and started pumping out cars. And you get zero interest on a 5-year loan to go buy a new truck, an F-150 or something. People are just borrowing money like crazy to buy cars. People are borrowing money like crazy to go to college, which is, in my opinion, virtually useless nowadays. These are all financial bubbles ready to pop. So what's to stop them from the Federal Reserve then buying up these we wouldn't, let's see, mortgage industry, mortgage-backed securities, what would we call them? Student loan-backed securities? I mean, student-backed securities?
Sure.
I'm sure if they're not already doing it, I'm sure somebody will package up student loan portfolios and sell them with some, BS credit score.
You're talking about The Big Short here, part 2.
Yeah. Big Short and student loans. Somebody's going to make. I mean, maybe they already have it. I don't know.
Wow.
I'm not involved in the inner workings of Goldman Sachs, but somebody's probably working on a
swap,
a derivative product or a swap on student loan debt somewhere.
Wow.
But that can blow up in a heartbeat. Man, all this stuff that's, if you really want to dig into the history of money, right? All money is debt at this point, right? I mean, all our currency anyway is debt. If we paid off all of our debt, there's no money left, right? I mean,
sure, right. Yeah, no, that's interesting. I mean, and it really goes to show, when you were explaining before, how there's just a certain point where it just doesn't make sense. It's being lent out and printed and created with nothing and lent, and then at a certain point you realize, if you really look at it, that it just doesn't make sense. And that's where a lot of misinformation, and going back to the education system, students aren't being told. In fact, they're taught that the Federal Reserve is good and they control the markets, and they're the thermostat for the economy. They tweak it. They tweak the thermostat, and they're able to control the markets long term.
Right. Well, I mean, you can also look at, we just came off of 8 years of the Obama-Messiah, right, who apparently saved the free world, according to some pundits. But what really happened? I mean, there was more federal debt created during his 8-year administration than all previous presidents combined. And he's the only president in U.S. history to have been at war every single day of his presidency.
Wow, I actually didn't know that.
Every single day of his presidency, the United States was at war in a conflict. And, people complain, that George Bush, G.W. Bush, was a warmongering president. Well, Obama invaded, 7 countries to Bush's 3? And Obama started his presidency fresh off a Nobel Peace Prize, right? So, I mean, but the war industry also creates, artificially in my opinion, but it artificially creates economic prosperity, because the government, goes to war and buys all these billion-dollar airplanes and ships, and we print money to buy it. It creates jobs, artificial jobs that don't really have any productive use per se, but nonetheless, it creates jobs in government and government contract work, and that money flows. It trickles out. When you print that much money, it's got to go somewhere. I mean, water, money's like water. It follows the path of least resistance, so it flows out, and it ends up somewhere. And I have to think that a lot of defense spending has some impact on this, if you want to call it a positive economic effect. I mean, everyone feels richer in their pocketbook right now. That's why we call him the Obama-Messiah now, right?
Right. Well, that's interesting, and especially, I guess people don't really know what's going to happen with Trump and on the war front here, if he's going to just go into the Middle East, do what he says he wants to do, take care of ISIS, and then completely abandon the region. I don't mean that to sound one way or another, but I am just curious as to the wealth effect of the country. If the war machine slows down, if that's going to be an immediate stress on the economy. Of course, the long-term stress is all the debt that's accumulating, the debt bubble that's on the horizon. But what about in the short term, if we see a slowdown? That depends on how the policymakers react to it, right? Because right now the defense budget is about a quarter of the federal budget, right? About a quarter of all federal spending is in defense. I mean, we're, huge numbers here. I mean, we have almost 1,000 military bases in 160 some odd countries nowadays. I mean, we have effectively, the U.S. has effectively colonized the planet militarily. So, it's a monster that definitely needs to be reined in. Will Trump do it? Who knows? He's a wild card. We don't know what the heck he's going to do. But if it was reined in, maybe some military bases closed, some defense cuts, we pull out of the Middle East. I mean, that would be fantastic. But I guess it kind of depends on what they end up doing with the surplus, because that surplus, it's hard to give a government worker a budget and then take it back away from them, right? Well, good job. You didn't spend all your money last year. We're going to cut your budget. Good job. Because there's no profit motive in government work. A government worker, if he had a budget in his department of $1 million, and on December 30th he'd only spent $800,000, that's going to be a heavy spending day, right? And therein lies the problem. Budget. Yep.
Because there's no profit motive. There's no profit motive in government work. He doesn't get like an incentive to save money, he's incentivized to spend his entire budget. And so, I mean, who knows if that money was redirected, if instead of spending a quarter of the federal budget in defense contracting, we cut it back to, let's say, 20%, and we use that 5% on infrastructure projects, building Elon Musk's Hyperloop across the country, or fixing bridges, repaving roads, laying fiber optic cables, stuff like that. If we could work on infrastructure, that would be a good allocation of resources. I just don't see that actually happen.
Well, I'd like to switch gears here. Has the election of Donald Trump over Hillary Clinton changed the way you are protecting your wealth going forward here in 2017?
Honestly, no. The political climate has little impact, in my opinion, on your business, to be honest. And I know a lot of people probably would disagree with that. Maybe if you're in a big business, if you're a government contractor or a big construction company, or a defense contractor or something, or a healthcare in the healthcare industry, I could see how political policies can affect you. But for me personally, and I think most small business owners out there, we're not really doing anything, or I'm not really doing anything any different. I mean, I see opportunities as they appear. I'm a very opportunistic entrepreneur. If I see the best opportunity for me and my business is in where you're at, Texas, I'm going to go for it there. If I think it's in Singapore, I'm going for it there. I don't really care what's going on in the White House, to be honest. Doesn't matter. Doesn't make much difference to me. If tax rates go up 5%, 10%, 50%, it might change the way I structure some things from a business structure standpoint, but it doesn't. I'm not going to say, well, you know what, tax rates went up, so forget it. I'm going to stop producing. I'm a producer, so I'm gonna keep doing what I'm doing.
Sure,
I might structure things different, but I don't see a difference between any political climate, to be honest.
So you're helping people structure their finances, suggesting where they should open up a bank account, where they can open up their business and really diversify their life. So let's just start here. Where is some of the worst places in the world to be doing business from your experience?
To do business, that's kind of a catch-22, actually, I believe. I think the U.S. is probably the worst place in the world to do business. However, it has a big consumer population that spend a lot of money. So it's a marketplace you can't really avoid. You might find it very easy to do business in some place like, I don't know, pick some small country. Let's say
Cayman Islands or something.
Well, I wasn't going to go offshore, but Cayman is purely a financial hub. I mean, if you're into banking, trust services, corporate services, investment business, Cayman's not a bad place to be. But I was going to say, like, if you're in some country like Croatia, for example, ease of doing business, and I'm just hypothetically saying, I'm not saying Croatia is easier to do business, but hypothetically, Croatia might be a much easier place to do business than the U.S., but it's also a population of a couple million people. So and it's I'm not going to say it's a poor country, but their disposable income is less than Americans. So I think the U.S. is one of the hardest countries in the world to do business. The regulations, the red tape, it just makes it, and it gets harder and harder every year, especially for the small business owner.
Sure.
I mean, I know a lot of doctors, for example, selling their practices because, the Affordable Care Act has just made it exceptionally difficult for them to do business. So they're just selling out to, the big hospital chains and stuff like that. But,
Sure. Bobby,
there's a lot of people just saying, forget it.
Well, let's talk about, where the rubber meets the road here. There's a lot of people listening to this podcast who own businesses here in the U.S. and live in the U.S. and are looking for ways to protect their wealth. What is, maybe from your perspective, what would be some advice you would give this person and for what reason?
Sure. Yeah, I'll tag on to the last part I was just mentioning real quick. The U.S. is such a huge market, though, no matter where you are in the world, you can't really avoid it to do business. I mean, it's still, as in terms of GDP, it's still the largest economy in the world, although China is getting very close and has already bypassed the U.S. in terms of buying power GDP. But you can't avoid it. So it might be more complicated to do business in the U.S., but you're shooting yourself in the foot to throw away all the money. So you have to go for it. You just have to think about how you're structuring. Now, as far as entrepreneurs and investors currently living or working or doing business in the U.S., yeah, I mean, there's lots of things they can do to diversify their business, their assets, their portfolios. We talk a lot about, and I guess our tagline is internationalize your business, your wealth, and your life. And we call that concept geo-arbitrage, where basically you take advantage of multiple jurisdictions. So, for example, let's say you're an American citizen living in Texas, and maybe you've got some money tied up somewhere, and you want to invest it. Well, one thing you could think about, just a simple strategy, is to move some of that cash offshore into an offshore bank account somewhere. And a lot of people think, oh my God, he said the word offshore. This is crazy. I'm going to prison. The IRS is going to move into my house, stuff like that. But that's not true. There's nothing illegal or immoral about moving cash offshore. There are some reporting requirements, of course, if you have some funds offshore, but there's nothing illegal or immoral about it, although for some reason the media portrays it as such, and so people get sucked into the media banter and they believe it. But that would be a simple, let's say, kindergarten level step, is just open an offshore bank account and move some of your wealth. And why would you do that? I will illustrate that point with an example. I met a guy a few years ago who was getting prosecuted by the IRS for tax evasion or tax fraud. I can't remember, but I think it was tax evasion. Essentially, long story short, I'm not making a case one way or another what he did, whether it was right or wrong, but basically his CFO and his controller had got together and decided they weren't going to pay payroll tax for a few years, and he was not aware of it. However, as the CEO and primary shareholder of the company, doesn't matter. He still has a personal liability associated with non-payment of payroll tax. And so the short answer, the short story is he ended up getting sentenced to jail. And before he was ever sentenced, just when they within the first week of opening the investigation against this guy, they put a lien on his house. They put a lien on his vacation house. They seized his personal and his business bank accounts and completely shut his company down. This was before he was actually found to be guilty of any tax fraud or tax evasion. Before, not after. The whole proven or innocent until proven guilty thing, that's not the case. If you have a government agency going after you, the FTC, the SEC, the IRS, whoever, you are guilty until proven innocent, and they can freeze your assets and seize your assets until such time that they deem you are innocent. Now, the problem that happened with this guy is he was unable to pay for a very high-quality legal defense team, so he ended up getting sentenced to a few years in jail. And he told me, I met this guy a few years ago, actually right before he was going to jail, and he told me, he said, I wish I had some money sitting in an offshore bank account where at least the government couldn't have seized it and I could have paid for better lawyers.
Wow.
So,
well, Bobby,
and that's that's a negative story, right? That's a pretty terrible negative story, and people think, well, that'll never happen to me, right? But the problem with unforeseen circumstances is just that they're unforeseen.
And that's why people buy insurance, right? It's for it's not for a positive reason. It's for the extreme negative.
Nobody buys health insurance and says, God, if I could only break my spine to make this policy pay off, right? If I could only get a brain tumor so this thing would pay off for itself, right? Nobody does that. You have the insurance in place for the emergency situation. And there's no downside to having, a nest egg of cash sitting in an offshore bank account. It's just kind of like an insurance policy. In the U.S., now let me clarify this here. If you put your money in an offshore bank account at HSBC in Hong Kong, the U.S. can still touch that because HSBC has branches in the U.S. They'll just go execute the judgment at HSBC in New York, and they'll grab the money anyway. So you can't have your money sitting in, a Citi or an HSBC or somebody like that has branches all over the world, including the U.S. You have to bank in some jurisdiction where they don't actually have branches in the U.S. So they're outside of the arm of the U.S. legal system.
Bobby, so you mentioned a great point as to why people should diversify out of their local country. And I assume that's not just the U.S. I mean, if you're somewhere else and you're 100% in their local system, you're exposed to them. So what are some other reasons why people should consider this? Consider diversifying brokerage accounts, bank accounts, businesses. What are the reasons?
Well, there can be some tax benefits, but that's a much more complicated topic, and I don't think we have time for that in this show. If you're an expat or if you don't live in the U.S., if you're an American citizen and you move abroad, there's some pretty significant tax benefits. If you have a legitimate business function outside of the U.S., you can defer some income tax in your offshore company. It can't be just a way to transfer money out of your U.S. company to offshore. But anyway, there's some complicated things there. But there are some legitimate reasons for tax benefits. There's some investment opportunities that aren't really available to you if you're investing within the U.S. and through the U.S. financial system. And I'm targeting the U.S. because, as we talked earlier, you told me the majority of your listeners are U.S.-centric. I work with clients all over the world. As a matter of fact, I don't even think Americans make up half my target client base, but I do have a lot of American clients. I have a lot of Europeans, a lot of Canadians, a lot of Australians, actually. So there's a lot of investment opportunities that aren't even available to you within the U.S. financial system because of certain SEC rules. They're not available to be marketed to Americans within the U.S. So there's some things that you can access once you're outside of the U.S. financial system. Diversifying across currencies. I use the example, if you're the if you're the small business owner living in Kansas, maybe you got a couple of rental properties in Kansas, you got all your bank accounts in Kansas, maybe you deal with your local stockbroker there in Kansas. Well, first of all, you are geographically bound. You're tied to that local Kansas economy. If, let's say you got a bunch of rental properties, for example, residential rental properties, and the big factory in your town shuts down, that could have an impact on your rental market. You might have to lower your rents to attract renters, which affects your yield. You're stuck in the U.S. dollar. All your assets, all your investments, all your cash, all your business is conducted in U.S. dollars, which the U.S. dollar is strong right now. But as we know, currencies fluctuate up and down. So you could be hedging some of your risk in a foreign currency. You can even hedge your risk in a foreign currency through investing in foreign physical assets. For example, you could be buying property in, I don't know, let's say Colombia, in Colombian pesos. So you're actually, like, that's an interesting option right now, because right now the Colombian peso is about 3,000 pesos to the dollar. Just a couple of years ago, it was only like 1,800 pesos to the dollar, because the peso tracks resource markets. It's a very much a resource economy, so it almost parallels like the oil prices. And so as oil prices go back up, the peso goes back up. And by up, I mean it'll go from 3,000 down to, say, 2,500, which is a gain in the currency transaction. So if you bought property in Colombia right now where you're exchanging your dollars, let's say $100,000 for, what would that be? 3 million pesos? I can't even, no, 300 million pesos, right? If you're exchanging it for the pesos and then the peso gains on the dollar, you have a physical asset in another country that you can put your hands on, physically touch, you can rent it out, earn a cash flow on it, and you can see some appreciation in your currency diversification as well.
Sure. Yeah, and I've seen that as well, even with the businesses that I'm involved with and dealing with people around the world. You know, you get paid in different currencies. You're hedged in certain ways, which is a nice benefit, as you were saying there. Bobby, I want to ask you then about a lot of people here, when they talk about protecting their wealth, they're wondering about what to do with their precious metals. Precious metals, there's, you know, you might have a few safes full at your house. You know, that may scare people, you know, but at the same time, they don't want to store their metal in a vault that they don't necessarily trust. What have you suggested people do in this circumstance where they own precious metals, they want to own the physical, but they also want to feel protected?
You know, I take a pretty pragmatic view to precious metals, actually. First of all, I'm not a gold bug by any means, or a precious metals bug by any means. You know, I've got some friends that are very, very heavily involved in precious metals. They would tell you to put all your wealth in precious metals, and, you know, because gold is real money, and that, you know, those types of arguments. But I'm not a gold bug. I would say, you know, maybe if that makes you feel comfortable, maybe 10% of your wealth. I wouldn't say any more than 10% in gold, but it depends on how much gold you have. If you got a handful of coins, just put it in the safe in your house.
Sure.
Right. If you've got a dump truck load, well, you've got a whole different issue, right?
Right.
So, you know, I had a client, I hadn't talked to him in a couple of years, but he had, not a dump truck load, that's an exaggeration, but his grandfather had been buying gold coins as savings. His great-grandfather had been buying gold coins as like his savings account his whole life. And then his grandfather started doing it. Then his father started doing it. And as time went, grandfather passed it to his son, or great-grandfather passed it to his son, grandfather passed it to his son, so on and so forth. So my client accumulated a pretty significant amount of gold coins. So he did have a sizable amount. I do understand the risk of keeping it at your house, right? What if your house gets burglarized and you get robbed? I mean, there's things you can do, hidden safes in the floor. I had one client of mine, I thought this was a pretty clever idea. He actually went to Lowe's or Home Depot or something like that and bought some PVC pipes. I believe it's like 1.5 inch diameter PVC pipe with the sealed end caps. And he actually just put his coins in there and hose clamped it to the water pipes in the crawl space under his house. I thought that was a pretty interesting idea, because who's going to climb under your house and steal, you know, look for that, right? I mean, nobody's going to do that, right? So that was kind of interesting. That was an interesting idea. I know some people that go out, and probably not if they have just gold, just some precious metals, but I know some people that will go out and get a private self-storage unit, install a safe in that self-storage unit, and then, you know, keep cash, gold, maybe some guns, some ammo, you know, motorcycle, whatever.
Sure.
In their self-storage.
And any benefit, in your opinion, to diversifying across country borders, your precious metals?
For gold?
Yes.
And it depends on what you're doing. We work with a few different vaults. We actually buy and store gold for clients. Now, I mean, we don't have the vault, but through one of our affiliated companies, we buy metals for clients and help them store it in a couple different places. I would say if you already have a ton of gold, you need to figure out a home storage unit, because it gets expensive to move gold. I mean, if you're really, really adamant about it, you can move it. You can have it shipped insured through Brinks or there's another one that I'm drawing a blank on right now. But Brinks is a big one. They'll ship that gold, with insurance, 100% value insurance, and you can ship it to a vault. We have a vault that we work with in Panama, one in Cayman, one in Singapore, one in Switzerland. So there's a few places you can put it if you're adamant about it. But I would say if you're really interested in storing gold offshore in a vault, just start purchasing it there, because it's so expensive to get it there. Just begin your purchase. If you say, you know what, I really want to buy $100,000 worth of gold, and I got this cash sitting around. I don't want to buy $100,000 and put it in my safe. That would be a good point to start and say, all right, let's get a vault agreement in, let's say, Singapore, for example, or Cayman or something like that, and start the process. But if you've got a bunch of gold already sitting at home, I don't know. I'm kind of old school. I like to put my hands on it. So
sure,
I think I'd personally rather have it sitting in my safe, and I could be like what was the old cartoon character, Scrooge McDuck? Go fill up my bathtub with gold coins and roll around in it.
Hey, well, there's nothing like actually holding either a gold or silver coin. I think there's something just in the spirit, in your mind. I mean, you feeling like, man, I don't want to let this go, which is actually one thing for me. I have a hard time selling my precious. I've never sold any of my precious metals, to be honest with you. I don't invest I don't invest every dime in it, but I allocate some savings towards it, but I keep it. I don't, as it goes up and down, I don't touch it. Bobby, so I guess in a conclusion sort of way here, what sort of people are you helping? I mean, who should be interested in your service, and what can you provide for them?
So I have a few different target audiences. I mean, honestly, most of my clients are very, let's say, libertarian minded. They're usually entrepreneurial or maybe investors. They've probably done fairly well for themselves, not necessarily very high net worth clients, but I got a lot of young guys that are clients of mine that are like up and coming guys in their 20s and 30s that are building some good businesses, and do a lot of work with them on the corporate service side, where we help them structure their companies for asset protection and tax minimization purposes. I've got a lot of clients that are what we call digital nomads, or as some people say, they're expats with commitment issues. But I've got a lot of digital nomad type clients, guys that have location independent businesses that they know how to run their business, but they don't know how to properly structure it. And like, for example, let's say you're from California, but you run a company, an online e-commerce business. You're selling, $100,000 a month worth of product, but you're living in Southeast Asia. You don't know how to structure your company. You don't know how to properly structure your taxes and stuff like that. So I work with a lot of guys like that. I have a lot of clients that are looking for second residency and second citizenship opportunities. And I have some high net worth people. We do trust formation and administration as well, that are people higher net worth people that are looking to set up trusts or asset protection and estate planning.
Well, hey, Bobby, I appreciate you coming on the line with me and really sharing with us, opening up our minds to the need for this and why people should consider this. And, people who have a lot of money and who are running businesses and who have something to lose should really consider having a conversation with you. So, again, thanks for coming on the line with me today, and we'll talk soon.
All right, Kenneth. Thanks for having me. I hope you enjoyed it.